Well, good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. I want to talk tonight about debt, financial restructuring, companies that have got an obligation to look for debt, and I think it's an issue that we got to be thinking about for companies. Going into the new year with interest rates and what's going to happen with them. Something like 50% of all Canadian mortgages are coming due in the next 2 years, and lots of companies have debt that are coming due as well. And so my guest is Shilpa Mishra. She is a partner and managing director of BDO Canada. She works in capital raising and debt advisory and advises clients on financing, debt restructuring, and financial and strategic reviews. She also, interesting enough, leads BDO's Women Driving Growth service line, where BDO provides its full suite of services to women leaders through an all-women team. Sounds fascinating. Shilpa, thanks for joining us today.
Thank you, Brian. Thank you for having me.
So tell me a little bit about your background and how you got to BDO and financial restructuring advisory services.
So Brian, first of all, thank you for having me on the show. I'm very excited to be here. I would say it's really my love of numbers, my interest in math and data analytics is what attracted me to this business. But really, as you said, in your intro, in my current role, what I do is I lead BDO Canada's capital advisory practice. And we help clients with private placements of equity and debt raises, or as I say, we help clients to find the money. So what I do every day, Brian, is I work with mid-sized, large businesses and business owners who are generally first generation and have built their business from scratch against all odds. And what I really enjoy about my job is as I find the money for my clients, because I've worked at the large banks, because I've worked on Bay Street for such a long time, I know the network and the processes quite well. And so I'm able to advocate for my clients, bring the brand of a large global firm like BDO and help them to solve their problems and really be in the trenches with them.
Who are you raising the money from?
We go out and we raise money from banks, private equity funds, alternative debt funds. And what's interesting is that the money is quite plentiful in Canada, but US PE is very, very interested, especially in Southern Ontario. US alternative debt is very interested, especially in Southern Ontario. So we raise money from, and even from family offices globally.
And you do this for debt and equity or just debt?
We do it for both debt and equity, but 80% of our business is debt raising.
And for all firms, all different industries, all different sectors of society?
We do. So we are an industry agnostic business, but what's interesting is that, 3-4 years ago when cannabis first became huge, there was tons of money for cannabis. Now there's a bit of restriction in that, right? So that's one industry where I would say we're not as active, and same with oil and gas exploration. Those are very high risk industries, but other than those two, we're industry agnostic and we're happy to help our clients.
Fascinating. We'll have to come back and ask more about that. I saw in the paper that BDO has just released a quarterly report on debt. What was in your quarterly report?
So every quarter we write a debt report, which really summarizes what's going on in Canada in terms of debt, equity, and even transactions, right? So what we talked about in our report was that in the third quarter of 2023, if you take a look at the Canadian debt market, and it would apply to the US too, there was slow overall growth in the debt that was being raised, right? And just looking at initial numbers, it's not going to be any different for the fourth quarter. And if you just take a look at the bare bones data, in the third quarter, loan issuance in Canada was about 1.36 trillion. Which is still good because there's a 5% year-over-year growth. But if you take a look at the prior year, 22 to 21, there was 10% year-over-year growth in loan issuance. So really what we were trying to say in our debt market report is that the slower pace of lending in the Canadian debt markets was primarily due to conservatism from the large Canadian financial institutions. And if you look at, just even the bank's Q3 results, Brian, it's overall their quarter-over-quarter growth this past quarter. So in the past few years, quarter-over-quarter growth at the banks in terms of debt was, let's say, 5 to 8%. This past quarter, in the third quarter, it was only 1%. So the banks are being much, much more conservative. But having said that, it's not that the banks actively don't want to lend money. It's just precipitated by the uncertainty in the economic environment. And that's really what we talked about in our debt report.
So, I'm in the debt market, and my sense is that banks have become more conservative on the amount of loan that they're willing to lend relative to value. And so loan to values that used to be in the real estate business in the 65 to 75% range are now down around 50%. That debt service coverage ratios are the same that they were in the past, but because of high interest rates, they become more challenging to meet. And spreads, the difference between the relevant government bond and what they're offering to clients has increased. And so therefore, you get higher interest rates, higher spreads, less amount of debt. It's a pretty challenging market, I would have thought. And so you're describing it as conservative, but I think it's more restrictive than conservative. Is that appropriate?
So whenever people ask me about this question, they're really asking about the R word, right? It's really all about the R word. I like to use another R word, reset. There was a frantic pace of growth and lending and M&A in 21 and early 2022, all driven by cheap money. All that's happening now, Brian, is that the economy is resetting after the artificial sweetener of the low interest rates from the past few years, right? So I think it's very, very, very important to keep that in mind as we look at what's going on. But what's interesting is that, and this is another thing we pointed out in our debt report, is that despite all the challenges, all the headwinds, the Canadian economy and the business environment continue to perform well in the third quarter, right? Despite large macroeconomic headwinds and black swan events like the wildfires in Western Canada, the flooding in Atlantic Canada, and the Port of Vancouver strike. So overall, as we work with our clients, mid-market businesses are continuing to increase their market share. They're continuing to grow. Volumes continue to be up, even though prices are down. But what's very important, to your point, for all this to continue, these businesses need lending. They need money.
So your other R word, I presume, is recession. Are we in a recession?
So we get asked that all the time. Technically, no, we're not in a recession. As you look at, the GDP growth and the yield curve, we're technically not in a recession, but there is a reset. But I would go back to what I said, Brian. It's just a reset from what was the frenzy.
You're sort of suggesting that this tough economic time that we're currently going through is actually positive. That you think it's a reset, not a recession. You think this is a helpful process that we're going through?
No, that's so. Let me further explain a little bit of what I was saying. Right. So I'm not saying that what we're going through right now is basically is good for the economy, but overall, there was a frenzied pace of growth and lending in the past, and now it's all just settling down. And basically, as we look to the future, as we look to what's going on in the future, yes, debt pricing will continue to be high. Lenders, to your point, lenders are continuing to focus on evaluating the borrower's use of proceeds, developing a more stringent capital structure, right? But I think what's important to note is that for businesses that are sometimes having challenges, that are, hearing, messages from their banks that they can't get money. And we talk about this in our debt report too, is that, of all the money that was loaned in 2023, 60% was from the Canadian banks, but 40% was from alternative lenders, private debt funds. And so there's alternative debt readily available in Canada and the US, and there's lots of options for lending as businesses continue to grow.
How do you see 2024? Is it going to get worse? Is it going to get better? What's your sense?
We get asked that quite a bit, right? What's going to happen and what's your prediction for the future? So in terms of 2024, the Bank of Canada has been very honest, and they've said that the overall inflation continues to be above the 2% target, right? So you and I can sit here and argue, is the 2% right? Is it 3%? So what we anticipate is, there's a lot of conflicting messaging around this, but we anticipate that the rates will continue to stay high, but start to drop towards the fall of next year. And as the rates continue to drop overall, we will see the economy also continue to have a faster pace of growth with a full recovery in early 2025.
So 24 is sort of going to continue this reset for at least 6 months or so, effectively, is what you're saying. And people are going to be waiting. Banks are going to be waiting. Lenders are going to be waiting a little bit until such time as rates come down. And borrowers are going to be waiting as well for a little bit of a lower interest rate. We've got to take a break for some messages, and we're going to be back in just 2 minutes with Shilpa Mishra from BDO Canada talking about raising debt for companies in the Canadian debt market. Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Shilpa Mishra. She is a partner and managing director at BDO Canada. She works in capital raising and debt advisory and advises clients on financing, debt restructuring, and financial strategic review. She also leads BDO's Women Driving Growth service line, which is where BDO provides its full suite of services to women with an all-women team. Sounds fascinating. We're going to chat about that. Shilpa, I got to ask you, though, I've been reading a lot of reports of layoffs in the Canadian banking industry. What's happening? Is because volume's down, profitability's down, that banks are making employees take the hit for this? What's going on?
So essentially what's happening right now is that, just like the rest of us, the Canadian banks are working through tighter liquidity and capital constraints. Right? So overall, with the higher interest rates, tighter liquidities, the banks are looking at the same kind of challenges that we are. So the layoffs that were announced, if you take a look at and you read further, they were announced amidst news that the Canadian banks were also restructuring their lending and capital market businesses, right? So overall, as the economy continues to work through the uncertain times, banks are just really managing risks by being cautious, which if I may be honest, they should. Now, in terms of the layoffs, they're done. We don't see any more.
You don't think there's going to be a lot more?
There's going to be no more in the near future, and it's just about banks managing through the uncertainty.
What's happening with bank profitability and loan loss reserves? Are they becoming more risky?
Yeah, so I think as we talk about the Canadian banks, I want to say one very, very important point that we should all be aware of, right? It's really because the Canadian banks are more conservative that to date in Canada, we haven't had a Silicon Valley bank-like collapse, right? We've got 5 banks. They're closely regulated by OSFI, and they're also tightly supervised. And also in Canada, the banking sector has very robust capital requirements. It's subject to stress testing, significant monitoring, all things that make me sleep better at night. So overall, yes, the banks are being more conservative, but it's warranted and for good reason. Now, in terms of loan loss reserves, yes, Q3 profitability was down, primarily at the banks, primarily driven by higher loan losses, also driven by higher expense costs. Going forward, the banks have taken quite a bit of provisions. We see that slowing down in 2024 and a more return to normal towards the end of 2024.
So, we've gone through quite a roller coaster in the last couple of years. We talk about, these black swan events happening, once in a while, but we had the global recession back in 2008, 2009. We had the pandemic that, I guess the last one we had, some people think was 100 years ago with the Spanish flu. Other people say, no, it was SARS 15 years ago. But it certainly impacted us all very dramatically. We've had a Russian invasion of Ukraine. We've now got strife in the Middle East. What do you see the capital raising environment, the banking environment, the equity markets? What's going to happen, do you think, in the next, say, 5 years? What's your outlook?
Yeah, so I think in the near future, right? You brought this up at the top of the hour. In the near future, the big issue for banks, businesses, all of us right now are the high interest rates. And you said this in your opening, that really it's the renewal of mortgages that were taken in 21 and 22 that are coming up in the next year or two. That could be the tsunami that potentially pushes our economy into a tailspin, right? So before I talk a little bit about what's going to happen in the next 5 years, let's talk about some facts, Brian, right? The pace of mortgage and credit growth has slowed. And really, if we see the rates continue to be where they are, there's going to be tension in the Canadian economy. But the other thing is, we're hearing from the Bank of Canada that they continue to worry that inflation is still very sticky. It's still not down to the 2%. So, what we expect is for the Bank of Canada to remain on the sidelines, not move the rates downward for at least another year, and then eventually bringing, the rates down at the end of the year. Now, over the next 5 years, the banks will continue to be conservative. They're going to really focus on more asset-backed lending so that they have those securitized assets for which they provide lending. They're going to take a look at structures. They're going to make sure the proceeds of the funds that the businesses and even consumers are getting are used in the way that they want. So we see conservatism coming up ahead. But I think there's one thing we've all learned in the last 4 years. Nothing is for certain. We all woke up one day and there was a global pandemic, right? So, and then we all thought from the pandemic, there was going to be a massive global recession, but there was a massive boom. So nothing is certain, but more uncertainty ahead for the next year. But really what we're watching is really the renewal of the mortgages, as is everybody else.
But, as I said as well, I think that, there's been a big focus on the amount of mortgages that come due, but there's a lot of bank debt for companies that come due as well. The typical, you would know better than I, but while mortgage debt is typically about 5 years, a lot of bank debt is 5 years, 3 to 5 years. And I think a lot of that company debt is coming due in the next little while as well. And so, I'm hearing about, some financial institutions that are getting a lot more conservative on renewals. So even with borrowers that they know they like, they've had good, regular interest payments from, they're becoming more resistive about lending the same amount of money. And certainly, the interest rate has gone up. And as I said, earlier, I think spreads have gone up as well. And so it's going to be tough for medium-sized companies out there, isn't it?
You're absolutely right. The persistent tighter credit conditions, they're always felt more strongly by small and middle market Canadian companies, right? So these companies can't access some of the larger capital pools that, their larger counterparts can. But to the point that I made earlier, there is still 40% of the lending market that is alternative debt, right? I get calls every day, Brian, from U.S. alternative debt funds, U.S. private equity funds that want to lend in Southern Ontario. Why? They know that overall, the businesses in Canada, small, medium businesses, are well managed. There's conservatism. So there's a lot of money globally that wants to come into this country that's outside of the Canadian debt market. So the good news for all businesses, mid-market, small, large, is there's a huge pool of alternative debt, private equity capital that's available to access.
When you're accessing that debt, are you borrowing in Canadian dollars or US dollars?
So it depends, right? So if a company wants debt in Canadian dollars because the bulk of their, customers are here, it can be in Canadian dollars. But if they want debt because the bulk of their customers are in the US, there's lots of Canadian companies like that. I'm working with a distribution company now that's like that. It can be accessed in US dollars as well.
How do you actually access that debt from U.S. alternative lender providers? Do you go down to Wall Street and walk around and meet them all?
Well, so I think ultimately, if a business had to do it themselves, they would have to go down to Wall Street or Bay Street. So they can always call an advisor like us, right? So we have deep markets in the alternative debt space, in the private equity space, and we're actually the #1 M&A advisor globally and even in Canada. So they can easily call someone like me, and we have access to that debt. And what the good news is, a lot of the U.S. Alternative debt funds are actually not that expensive, right? So whenever somebody thinks, first of all, a couple of things. Whenever somebody thinks about alternative debt or alternative lending, they think about, something nefarious or, something that's, but a lot of those funds are run by very, very, former bankers, very experienced lenders that have their own investment return criteria. So, and they can offer creative structures. The rates aren't that much higher. So they can easily reach out to an advisor like us and we can help them navigate that market. And the best part about working with an advisor like us, we're offer 100% commission or success fee-based business. So it's a win-win for all.
Tell me about this this effort that you have in a team of women supplying financial services to women-run companies.
Absolutely, absolutely. So whenever I tell this, or talk about our service line, Women Driving Growth, which I also lead, I always like to talk about my experience in this industry. So I'm a woman and I work in corporate finance. And if it's okay with your listeners, viewers, I'd like to share what it was like for me when I first started, right?
Please.
Many, many years ago. I'm not going to tell you how old I am, Brian. So when I first started, I remember I walked into my derivative modeling class in university, and the professor looked at me and he said to me, "Oh, I think you have the wrong room. The cafeteria is down the hall." And I remember there was no place to sit. Nobody made place for me to sit. And, you know, I sat on the stairs. So, but, you know, a lot has changed, right? So let's talk a little bit about, you know, where women are today in business, right? So for the first time in Fortune's 68-year history, more than 10% of Fortune 500 companies are led by women, right? And a lot of this is in the materials and manufacturing industries. And even in Canada, 17% of small, medium businesses are 50% or more owned by women. And women start more businesses in Canada, and the Canadian women are most active in startups globally. So what our Women Driving Growth service line does is we're providing all of BDO's services, audit, assurance, tax, advisory, M&A, capital raising, to our women leader, women business owner clients. We're an all-women team to ensure that they're getting, you know, the right level of service. And if there are women out there in positions of power and they want to work with mostly women, they have that through our firm. And we're the only firm, actually, I would even in Canada and in the US that offer this service.
Fascinating. How long has this been going on?
So we started this, actually, it's very interesting. We started this service line early this year, not knowing what to expect, and we were overwhelmed. We filled up our pipeline quite quickly. Women leaders responded extremely positively. We've had a lot of good revenue come through, and next year we're going even bigger. So it's been a great initiative and very successful, which really says that women are really moving into positions of power. Things are changing, and they want to work with, you know, other women advisors.
Sounds fantastic. If people want to access BDO and or contact you, either for capital raising services and or for the women driving growth effort, how do they best do that?
So they can find me on LinkedIn. I'm very active on LinkedIn. I'm a bit of a social media influencer myself, or they can go to the BDO Canada website and get more details there.
Fantastic. Thank you so much for joining us today and telling us a little bit about the debt market, the capital raising market, BDO, and this interesting effort that you have in advising women-run companies.
Thank you, Brian. Thank you for the opportunity.
We're going to take a break for some messages and come back, and we've got an interesting story about Indigenous reconciliation and business partnerships with Indigenous people. Stay with us, everyone. Back in 2 minutes.